At the NATO summit in the Netherlands this week, Prime Minister Sir Keir Starmer pledged that the UK will be splashing out 5% of its GDP on national security by 2035. That's more cash for tanks, tech, and keeping us safe. My name is Jack Reeves and welcome back to this week's episode of Tax Tidbits, where this goal is aimed at addressing the growing global threats and appeasing pressure from US President Donald Trump, who says NATO allies aren't coughing up enough cash and has gone as far as threatening to let enemies do whatever the hell they want to those who don't pay their way. Critics at home weren't exactly clapping, accusing the government of offering big headlines without the funding to match, and asking why we're waiting 10 years to act when the world's already on fire. The government insists this spending spree will create jobs and boost wages, so maybe buying missiles will somehow help your mate Dave get a raise. Still, no one's quite sure where the extra £30 billion a year is going to come from. For UK businesses, this could open doors to government contracts, innovation grants, and in a bigger role in building everything from drones to data firewalls. Google might soon have to share the spotlight in the UK as the competition watchdog, the CMA, is looking into whether it has a bit too much power in the search engine world. You know, just the usual 90% market share. Under a shiny new law, the CMA could force Google to make changes like adding choice screens so users can pick from rival search engines. Google's not thrilled, calling the suggestions broad and unfocused, which is basically saying, please don't make us do this. The CMA isn't accusing Google of any shady business yet, but says changes could make things fairer for businesses and users, who currently fork out thousands of pounds a year for Google ads. Some people are worried that this move might backfire like it did in the EU, where similar rules accidentally boosted dodgy travel sites and buried legit ones. On the plus side, it might give smaller businesses a chance to rank somewhere besides page 47, assuming anyone ever chooses to use a search engine that isn't Google. This winter, twice as many UK households, about 2.7 million more, will get £150 off their energy bills thanks to changes in the Warm Home Discount Scheme. Now, anyone on means-tested benefits qualifies, regardless of their home's size or energy efficiency. It's great news for struggling families, but the cost might sneak onto everyone's bills via higher standing charges. On top of this, they're planning faster compensation for energy firm screw-ups, like long hold times or surprise bills designed to cut complaint response time in half. Basically, more help is coming, but there might be a small price tag hidden in the small print. The UK government has unveiled a new 10-year plan to help over 7,000 manufacturers slash energy bills by up to 25% by exempting them from some green energy levies, helping them stay competitive amid sky-high electricity prices. The plan also promises faster connections to the energy grid, a big skills boost with £1.2 billion extra per year for UK skills funding by 2029, and a focus on 8 key growth sectors, including clean energy and AI. While this move is generally welcomed, the hospitality and retail sectors feel left out, pointing out that 70% of the economy isn't covered by the plan. The government insists it's about creating a level playing field for globally competitive industries, not picking winners and losers. Though some might say that sounds like choosing favourites. The UK government is charging ahead with major changes to personal independence payment and universal credit, aiming to save £5 billion by 2030, despite a potential rebellion from over 120 Labour MPs. The changes will tighten eligibility for PIP's daily living support, affecting around 800,000 people, and freeze or reduce the universal credit top-up for those with health conditions, particularly hitting younger and new claimants. Around 3.2 million families are expected to lose out financially, with some facing losses of up to £4,500 a year. Around 3.8 million families will be better off thanks to tweaks in universal credit, but that doesn't quite balance the scales. The government argues the current welfare system is unsustainable and plans to invest £1 billion to help disabled people and those with long-term conditions find work. All eyes are on the big vote on July 1st, which could see the government's majority take a nosedive if enough MPs rebel. And that's it for this week's episode of Tax Tidbits. Plenty of policies, promises, and a pinch of public outrage. If you liked this video, don't forget to give it a thumbs up and subscribe to our channel so you stay up to date with our videos. See you next week.